Hello, Sage Seed. If you're new to the channel, I'm a professional value investor, and this is what it looks like for me to research the fundamentals of a company. Today, I have for us the absolute latest annual report for the Hershey Company. This dropped just a few days ago. 2023 season is now kicking off in full swing. Lots and lots of companies right around the end of February, beginning of March, reporting their 2023 numbers. We're going to go through the most interesting / biggest companies as the numbers drop. Let's dive in so that our wisdom can blossom. The income statement. Net sales increasing a little bit more than the costs of sales. With a little bit in between, that means that operating profit is ticking upward year after year. Let's scroll down and look at the earnings per share numbers. A little bit higher year after year. The balance sheet. It looks like there was a notable increase. Almost 60% of the assets that did increase in the latest year were additions to property, plant, and equipment. That combined with the fact that the ratio of total assets to total liabilities is like 1.6, 1.7, something like that. Hershey's is a growth company, or at least it's behaving like a growth company. Now, going into this, I knew the Hershey name. I think many of us might recognize it. It's such a long historied name that I didn't necessarily assume it was going to be acting like a growth company, but here we are. To the point that it didn't just use profit from last year, it also took on almost 10% more debt in the last year, and it's clear that that went into more property, plant, and equipment. Doesn't scream long historied company to me. Statement of cash flows. Hershey's definitely taking out new loans, definitely doing what the young spry companies usually are up to. Pretty consistent working capital management and positive working capital management. Hershey's generates money, and it generates billions of dollars every single year. That's a big difference between Hershey's and some of the younger companies, for sure. So in conclusion of the opening move, we're going to look at property, plant, and equipment, probably in the item 7, see if management wants to explain what the growth strategy is, because there seems to be a lot of focus on growth. We are now in the management's discussion. This is the very beginning of it, and you can see there's already the words business model and growth strategy, the very, very first section of the whole thing management wrote for us. And so it's not our imagination. The numbers really are telling us that this company is a growth company. Hershey Flexin, something that most companies that are growth companies cannot say no matter how much they want to. First words are, we are the largest producer of quality chocolate in North America. But very well written here. The second paragraph explains why they're still a growth company despite this fact. Our vision is to be the leading snacking powerhouse. Very well said from the management. They are quality chocolate, but they want all of snacking. Here there's a sentence hidden in a paragraph. Expansion into snacking has most recently been fueled by acquiring some dots and pretzels companies, as well as a company called Weaver in just the last couple of weeks. These all boil into something called the salty snacks segment. Also mentioning to us international growth. Then they start getting into more vague things, but probably still important. Here they're talking about sustainability, they're talking about competitive advantage, but not necessarily explaining what that is in detail. I say they're not being very specific because they mention like 6 different things in this short paragraph. Very different than their first paragraph where they were giving lots and lots of specific details. But as we get out of the strategy section, we can zoom back out and see that they're also telling us how many brand names they currently have. The number is 90. And that really is kind of the surprising / important takeaway from this, is that this management is the head of a world leader right now. World leader in snacks and chocolates and goodies like that in 90 different brand names. Almost no company has 90 products. They're not talking about products here. They're talking about 90 brand names leading into hundreds and hundreds of product categories. This is huge, and yet fully focused on growth. The way they think about this growth is also very, very different than most growth companies will ever be able to think about it. Why? Because they already have a huge billions and billions dollar business, which is not common. Hey, if you're getting more comfortable in covering the stories behind the numbers, please like and subscribe. Their main consideration in growth seems to be, as they're explaining with this table here, to look at how it's affecting the gross margin. Most growth companies are smaller. They don't have any gross margin to start with. They're trying to make the first business, not the 91st. And so Hershey with this huge advantage where if growth starts to lower the gross margin, they can have the data to know that maybe they pull back from certain growth categories. Maybe not all growth is the same, as is very clear to most startups out there. Not all growth is the same. Management here explaining to us that they spend a lot of time tracking how the company overall looks along with the growth initiatives to make sure that they only grow when they need to. Those things together kind of make us feel safe that Hershey's has been growing because it has the chance to, not because it's chasing anything uh, unrealistic. In particular, some of the growth in the last couple of years hasn't fully satisfied the company, even though it looks like legitimate real growth. A section here called Business Realignment Activity is really about optimizing the supply chain. Specifically, they call out the sales that they've been having in China in the last couple of years. They want to improve that operational efficiency. How so? By bringing in a lot of the digital transformation, AI type stuff that you see more and more companies talking about. Now, it looks like they avoided saying artificial intelligence, which I don't hate. I don't hate to see a company trying to disassociate from that stuff, but very much talking about just that. New technology and business models that simplify and automate processes. Whenever you're automating decision making, you're talking about AI. So another advantage of Hershey as a growth company is that most growth companies can't even get to the point of fully understanding their margins. And certainly, basically, no growth companies that I know of can grow and then be picky about squeezing cost efficiency basically right after they grew. Many companies have to protect customers for years before they can even think about something like a cost efficiency. Maybe a better way to say it is Hershey's doing both. It's acting like a mature, long history company and like a startup that is just running out the gate. I've talked to you about two things so far. Number one, Hershey's has $1 billion business to fuel its growth. Number two, Hershey's has data from all of its previous businesses in order to squeeze costs for the growth businesses a lot faster than most companies normally can. And now, number three, Hershey as a brand and as a company has long-standing strategic agreements with all sorts of other big companies. Specifically, we've got Kraft Foods, Cadbury, and Nestle, as well as some other like venture things. But basically, all of those are huge companies in their own right, and they actually collaborate with Hershey to kickstart new business ideas. They work together with innovation agreements. I'm not an expert, but I'd really like to know if someone knows of a startup snack company that is getting the attention of the Cadbury's, Crafts, and Nestle's of the world. I don't think it happens very often. And so here's the third thing, maybe the biggest thing, is that if Hershey's wants to try a new snack category, or that be pretzels like they just acquired a little bit ago, they can make a Kit Kat pretzel, a Cadbury pretzel, and York pretzel within a couple of months. Push those out to markets in 80 different countries. I don't know a single growth company that can do that like this. Hershey might be unique. So coming into Hershey's, I think I knew that it was going to be a nice, big, successful company. I don't think I knew it was going to be this kind of behemoth that is got more advantages than I can almost count. I tried to boil it down to three, but I did a simplification. This whole annual report is just beautiful. It's just Hershey Flexin for 200 pages almost. Like, not really a single problem really that they're bringing up. And maybe that's bad, but it kind of seems legit. Like, what they're saying makes sense. This is my thinking. We're gonna get the Sage Seeds AI ranking now. Now, this cannot get a bad ranking is what I'm thinking right now. But maybe it's so good that it won't necessarily be in the top 10 or anything like that, because it's just too good. There must be other people seeing this as well. Like, within a minute or two of looking at this annual report, I was like, oh, this is a good company. So I'm going to say it's like below the 30th percentile, but above the 50th. It's going to be somewhere positive, but kind of expensive, meaning it's not really big value. Sage Seeds AI is going to give us a ranking. Sage Seeds AI is trained to identify value investment opportunities. Tell your friends about it. Try to guess what it is before you see it. And let's see how close you get. Together we'll practice and become mega wealthy. Hershey is ranked 41st out of 100 in value for the 2023 season. Apparently, my instincts work sometimes, thank goodness. 41st percentile is right in that sweet spot where you could buy this and really not feel guilty at all. But you probably could find cheaper companies out there. If Hershey's price ever starts to dip, I think the hodlers know what to do. As the years progress, I don't know what's going to knock Hershey out. It's going to be wonderful to see how the snack market continues to evolve, because right now Hershey is looking like a 400-pound gorilla in a zoo filled with lemurs. Who knows? One of these lemurs might sneak up on them or something, but I'm here for it. Let's look to future seasons to see how this situation unfolds.